Workers with married filing jointly tax filing status can follow the steps in this video for guidance to complete Form W-4. Completing the Form W-4 tells your employer or employers how much federal income tax to withhold from your pay. Tax withholding is money you pay throughout the year towards the amount you owe in federal taxes. Many people think taxes are due at the end of the year. They are actually due throughout the year that you earn income. Form W-4 is important because it impacts how much you pay in taxes throughout the year, which can determine if you will receive a federal tax refund or owe taxes after you file your tax return. Form W-4 should be completed when you start a new job. Also, if you already have a Form W-4 on file with your employer, then you may want to submit a new form if you've recently gotten married, had a child, gotten another job, or had other important life changes that can change the amount you will owe in federal tax. Now let's start filling out the form, starting with Step 1, your personal information. Enter information, including your name, social security number, address, and city, state, and zip code. In this example, John B. Smith has checked married filing jointly or qualifying surviving spouse because he is married to Joan Smith, and they file taxes together. Of steps 2 to 4, you only need to complete the steps that apply to your situation.
Let's move on to Step 2, multiple jobs or your spouse works.
You should complete Step 2 if you are married, will file taxes jointly with your spouse, and your spouse also works. Each job should have a Form W-4 on file with its Human Resources Office. If you are married, have just one job, and your spouse does not earn an income, then you can skip Step 2. If Step 2 applies to your situation, then you should first gather the most recent pay stubs for you and your spouse. If you have a tax return for the most recent tax year, then you should also gather it as well. You will use these documents to complete Form W-4. After you have your pay stub, your spouse's pay stub, and your tax return, you can complete Step 2 by doing only one of the following options. Option 2A, Option 2B, or Option 2C. Option 2A. Use the IRS tax withholding estimator. Consider using the estimator if one or more of the following are true. First, you are submitting the Form W-4 to your employer after the beginning of the year. For example, if you are submitting the form between April and December. Second, you expect to work only part of the year. For example, you expect to work only from January through June. Third, you have changes during the year in your marital status, number of jobs for you, and or your spouse if you get married and decide to file your taxes as married filing jointly, or number of dependents, or changes in your tax deductions or credits. Fourth, you receive dividends, capital gains, Social Security, bonuses, or business income, or are subject to the additional Medicare tax or net investment income tax. Last, you prefer the most accurate withholding for multiple job situations. Again, if one or more of these situations is true, then you can consider using the estimator. When you have finished the estimator and other parts of Form W-4 that apply to you, then you and your spouse can print or download your completed W-4 forms from the irs.gov website and give it to your employer's human resources staff. Let's look at the next option. Option 2B. Use the multiple jobs worksheet on page 3 of the W-4 form. This is a good option if you and your spouse have 2 or more jobs, and one of you earns most of your household income. For example, let's say John Smith has one job that pays $50,000, another job that pays $10,000, and his spouse, Joan Smith, has a job that pays $10,000 for a total income of $70,000. Because Option 2B calculates the total extra tax you should pay for all the jobs you and your spouse have, you only need to complete the multiple jobs worksheet on the Form W-4 for the highest paying job. In this example, the Smiths would only need to complete the multiple jobs worksheet on the Form W-4 for the $50,000 job. For the other jobs, the Smiths could complete the Form W-4 using Option 2C, which we will discuss next. Option 2C is the last option for Step 2. If you and your spouse have just 2 jobs total, and you both earn similar amounts of pay each year, then you may consider this option. For example, if John Smith's job pays $30,000 per year, and Joan Smith's job pays between $15,000 and $30,000, then option C can be a good choice for them. If you choose option C, you and your spouse should check the box near it on your form to finish step 2. Let's move on to step 3, claim dependent and other credits. You complete this step only if you will claim a dependent or dependents on your tax filing. For example, let's say that John and Joan Smith have one child, who is age 10, and another child who is age 18. First, John would multiply the number of qualifying children under age 17 by $2,000. Because they have just one child under age 17, John would multiply 1 times 2,000, which equals $2,000. John would then write $2,000 in the first box in step 3. Next, John would multiply the number of other dependents by $500. Because John and Joan have another dependent, who is age 18 and doesn't qualify as a qualifying child under age 17, then John would multiply 1 times $500, which equals $500. John would then write $500 in the second box in step 3. For the third box in step 3, John needs to add the numbers in the first 2 boxes. So, John would add $2,000 and $500, which equals $2,500. John would then write $2,500 in the third box in step 3. If you do step 3, you only need to do step 3 on the form W-4 for the highest paying job. We can now move on to the next step on the form. Step 4 is for other adjustments. You can complete any of the options in step 4, if they apply to your situation. If you do step 4, you can decide to only do step 4A and or 4B. On form W-4 for the highest paying job, you do not need to complete step 4 for more than one form W-4. Option 4A is if you have other income that is not from a job. In this case, you may want to withhold tax from your paycheck to pay taxes on this income. A common example of income not from a job is interest you earn from a savings or investment account. Let's say that John and Joan have a joint savings account with $1,000 that has a 3% annual interest rate. At the end of the year, the account will have earned $30 in interest that is taxable. To withhold tax for the $30 in interest, John can enter $30 in step 4A. Option 4B is if you will claim itemized deductions instead of the standard deduction. In this case, you may want to reduce the amount you withhold throughout the year, because you know that your tax liability will be lower by claiming itemized deductions than if you claim the standard deduction. The standard deduction is a certain amount of income the federal government does not expect you to pay taxes on. The standard deduction amount depends on your tax filing status and the amounts set each year by the IRS. The current standard deduction amounts are listed at irs.gov. For option 4C, you may have already added a number to this line when you completed step 2. If you have not already added a number to this line and would like to withhold additional tax from your pay for each pay period, then you can enter that amount on line 4C. Now all you have left to do is step 5, which is to sign and date the form. Completing form W-4 can be an important step to manage your finances well throughout the year. If you have specific questions about your situation, then you can visit irs.gov for more information or work with a tax professional.